Hey everyone, welcome back. Ready for another deep dive?
Always up for a knowledge adventure.
Awesome. Well, today we're going to be talking global stock markets and some of the latest economic news. We got a brand new article from the Associated Press published just today. It is December 13th, 2024.
Fresh off the press.
Hot off the press. And the title is Stock Market Today. World shares are mixed. Follow Wall Street decline as price data disappoint.
Ooh, intriguing.
Yeah, so it sounds like we've got, a bit of a roller coaster out there, right? Some markets up, some down, and it looks like it's all thanks to some pretty interesting economic data. So ready to unpack this and see how it all connects.
Absolutely. Let's dive in.
Perfect. So first off, the article talks about how U.S. stock markets, they took a bit of a dip. They specifically mentioned the S&P 500.
Yeah, the S&P 500, that's like a snapshot of the 500 biggest companies in the U.S.
Right. And then also the Dow Jones Industrial Average, which, that's tracking 30 major companies in the industrial sector, both of them down yesterday. So what do you make of that? Is this just like a little blip, or could it be signaling something, something bigger on the horizon?
Well, stock markets, they can be a little bit fickle, right? But they're also kind of a reflection of how investors are feeling, almost like a mood ring for the overall economy.
Interesting.
Yeah, and I think these declines, they do suggest that there's a degree of uncertainty, maybe even a little bit of nervousness about what's happening in the economic world right now. Remember, investors, they're always trying to predict the future.
They're always trying to stay one step ahead.
Right.
Well, speaking of what's happening in the economic world, the article also goes on to talk about, jobs and inflation. Two pretty big topics.
Always relevant.
Always relevant.
Yeah.
So it says that more people filed for unemployment benefits last week than expected. Not exactly great news.
Not the direction we want to see that going in.
Right. But then, kind of on the flip side, the article also says that wholesale prices, those costs that businesses pay before they sell things to us, they were actually higher than economists predicted.
Okay, so we've got this sort of mixed picture emerging.
Yeah. It's kind of confusing. More people out of work, but prices are still going up. What's the connection there? Help me understand this.
Yeah, so you've hit on a really crucial point here. We've got these two big forces in the economy, jobs and inflation, and they're kind of always in this sort of push and pull dynamic, almost like a balancing act. And the Federal Reserve, that's the central bank of the U.S., they're the ones walking this tightrope, trying to, keep everything in check.
Okay, so walk me through this. What's the link between jobs and these rising prices?
All right, so let's break it down. When unemployment is high, what happens? People have less money to spend.
Right, less money to spend.
And that leads to lower demand for goods and services, which, it can push prices down.
Makes sense.
But then on the flip side, if prices are going up too fast, that's what we call inflation.
Right, inflation.
And that can really eat away at people's purchasing power, even if they have a job. So the Fed, they're stuck in the middle. They got to manage both sides of this whole equation, keep unemployment low, but also make sure inflation doesn't get out of hand.
It's a really tough job. So the article mentions that, traders are kind of betting that the Federal Reserve is going to cut interest rates at their next meeting.
Mm-hmm.
And this would be the third cut in a row. I remember, way back when interest rates were really high, made buying a house or even like a new car super expensive.
Absolutely. It has a huge impact on people's everyday decisions.
Yeah. But I'm guessing it's not as simple as saying, lower interest rates, everyone wins.
Right.
There's got to be some trade-offs.
You're right. It's never that straightforward.
So what are the potential downsides here? What should we be thinking about?
Well, when you cut interest rates, it's like stepping on the gas pedal for the economy, makes borrowing money cheaper, businesses feel more confident about investing, and hopefully people start spending more.
Oh, okay.
But, and here's the catch, if you pump too much money into the system, you can actually end up with, you guessed it, even higher inflation.
Ah, so it's a delicate balance.
Exactly.
Yeah.
The Fed's got to find that sweet spot, stimulate the economy without sending prices skyrocketing. And believe me, their decision is going to be watched very, very closely by everyone, not just in the U.S., but globally.
Globally. So let's zoom out a little bit and talk about what's happening around the world. The article highlights that global stock markets are, they're painting a bit of a mixed picture. Some are up, some are down. So what's the story there? Are other parts of the world facing the same kind of challenges that we're seeing in the U.S.?
It's definitely not a one-size-fits-all situation. Every region has its own unique dynamics. For example, over in Europe, we're seeing some moves that kind of mirror what the Fed might do here. The European Central Bank, They set monetary policy for a lot of European countries, and also the Swiss National Bank. They both just cut their interest rates.
Interesting.
So it seems like they're also trying to give their economies a bit of a boost, but then things look a bit different when you shift your focus to Asia.
Oh, okay. Tell me more about Asia. What's going on there?
Well, the article specifically calls out declines in Hong Kong and China's stock markets. And this might be tied to concerns about U.S. trade policies, and how they could potentially impact those economies, especially since they rely so heavily on exports.
Yeah. What happens in the U.S. doesn't stay in the U.S. It's all connected.
Exactly. It's a global web. And for another piece of that web, let's look at Japan. The article mentions that business sentiment there is kind of mixed. Large manufacturers, they seem to be feeling pretty optimistic, but the overall mood isn't quite as rosy.
So even within one country, you can have these very different experiences of the economy playing out.
Absolutely. It's important to remember that these broad economic trends, they impact different sectors and different people in very different ways.
So even if the headlines are all doom and gloom, there might be some bright spots hidden beneath the surface.
Always. It's all about digging deeper and considering the nuances. Economics isn't just about the numbers, it's about people, businesses, and all the complex decisions they're making every single day.
That's a good point. Speaking of complex decisions, let's talk about China for a second. The article mentions that Chinese leaders, they just wrapped up an economic policy meeting, and they decided to increase government borrowing and, well, make it easier for people to get credit.
Okay, so they're trying to pump some energy into the system.
Yeah, it sounds like they're really trying to give their economy a boost. But how does this all affect the rest of the world? Are we all going to feel the ripples of these decisions?
Well, China is the world's second largest economy, so what they do definitely has global implications. You're right, it creates these ripples. By increasing borrowing and easing credit, they're basically pumping more money into their system, hoping to stimulate demand for goods and services.
Okay.
Now, this could be good news for countries that export a lot to China.
Right, more demand means more business for them.
Exactly. But of course, there are always two sides to the coin.
What's the flip side? What should we be watching out for?
Well, if this leads to really rapid inflation in China, it could spill over into other economies. And, increased government borrowing, that always raises questions about whether that debt can be sustained in the long run. So it's a calculated risk, but one they clearly feel is worth taking.
Okay, so we've got a lot of moving pieces here. It sounds like the global economy is in a pretty delicate state right now.
Yeah, that's a fair assessment. Lots of factors at play. And it's hard to say with certainty how things will ultimately shake out.
Well, before we get too lost in the complexities, let's step back for a second. If our listener takes away just one thing from this discussion, what should it be? What's the most important message about the current global economic landscape?
I think the key takeaway is that we're in a period of transition and uncertainty. We're seeing a blend of positive and negative signals, and nobody has a crystal ball. Central banks around the world, they're trying to walk a very fine line, and their decisions are going to have a big impact on all of us, whether we're investors or just trying to, manage our day-to-day finances.
It really highlights just how much we need to stay informed and try to, understand these complex forces that are shaping our world.
Yeah.
It's easy to get overwhelmed by all the, the jargon and the economic data, but it's so important to see how it connects to our everyday lives.
Absolutely. It's not just about numbers on a spreadsheet. It's about people's jobs, their homes, their ability to put food on the table.
Exactly. And speaking of things that hit close to home, this whole conversation about jobs and the economy, it makes me think about the long-term effects of automation. It wasn't specifically mentioned in this article, but it's a trend that's already disrupting so many industries and changing the way we work. Do you think this is something we should be paying more attention to?
Oh, absolutely. Automation is a game changer. I mean, it has the potential to boost productivity and create all sorts of new opportunities.
Right.
But it also raises concerns about job displacement, and the need for workers to really adapt and learn new skills to stay relevant. It's a force that's going to continue to shape the economic landscape for years to come, for sure.
So it's not just about weathering the current storm. It's about preparing for the future and understanding how these long-term trends are going to affect our lives.
Precisely. And it's not just about governments and big corporations figuring this out either. It's about individuals taking ownership of their economic futures.
This brings us back to the article's focus on the stock market. It might seem like, a world that's totally separate from our daily concerns, but it actually reflects how people are feeling about the economy, both in the short term and the long term. When investors are confident, they put their money in, businesses grow, it creates jobs. But when they're feeling uncertain, like they seem to be right now, things can slow down.
It's a cyclical process, and understanding those cycles can help us all make better decisions, both financially and professionally.
So even if we're not, actively trading stocks every day, it's still valuable to keep an eye on what's happening in the markets.
Definitely.
Gives us a glimpse into the health of the economy and helps us anticipate potential shifts and challenges that might be coming our way.
Exactly. It's about being informed and empowered to make the best choices for ourselves and our families.
Okay, let's switch gears for a minute and talk about something else that caught my eye in this article. It was the discussion about China's economic policies. They're planning to increase government borrowing and ease those credit restrictions. What's the thinking behind those moves? Are they just trying to jumpstart their economy, or is there something more to it?
It's probably a bit of both, to be honest. China's economic growth has been slowing down a bit in recent years.
Yeah.
And these policies, they're designed to stimulate demand and get things moving again, increasing government spending, making it easier for people and businesses to borrow money. It's all about injecting some fuel into the economic engine.
Makes sense. But as you mentioned earlier, there are always potential risks, right? So what are some of the downsides here? What should we be watching out for?
One concern is that, all this increased government spending could lead to higher levels of debt, which could create problems down the road.
Yeah, debt can be a tricky thing.
It can be. Another risk is that easing credit restrictions, making it easier to borrow money, it could lead to a big surge in lending. And that can sometimes inflate asset bubbles, like in the housing market, for example, and create financial instability.
So it's a balancing act.
It always is. It remains to be seen whether China can achieve the desired stimulus without triggering some unintended consequences.
A bit of a gamble. What's interesting is that the article also mentions Japan's economic situation. It seems like they're experiencing a real mix of emotions over there. Large manufacturers are feeling pretty optimistic, but the overall feeling isn't quite as positive. What do you think is behind that discrepancy?
Japan's facing some unique challenges for sure. They've got an aging population, which means a shrinking workforce, less consumer spending.
Right, less people to buy things.
Exactly. And on top of that, they've got a massive national debt, which really limits their options when it comes to using government spending to stimulate the economy. So, while some sectors might be doing well, the overall picture is definitely more complex.
It just goes to show that there's no single story when it comes to the global economy, right?
Absolutely. Every region, every country has its own set of circumstances and challenges to navigate.
It's a constantly evolving puzzle, and all the pieces are connected.
A fascinating puzzle, though.
Oh, for sure. Okay, so we've talked about the U.S., Europe, Asia, and how everything's interconnected. What's the big takeaway here? What should our listener be thinking about as they try to navigate this complex economic landscape?
The world is in a state of flux, that's for sure. There's a lot of uncertainty out there, and it's really important to stay informed and be adaptable.
Be ready for anything.
Exactly. Whether it's thinking about your career choices, your investments, or even just your everyday spending habits, understanding these broader economic forces, it can really help you make better decisions.
It's about being proactive and taking control, rather than just reacting to whatever happens, right?
Precisely. It's about empowering yourself with knowledge and using that knowledge to navigate the world around you. And that world is always changing.
Well, that's a great note to end on. But before we wrap up completely, I want to leave our listener with one final thought.
We've talked about interest rates and inflation and, all these global stock markets, but it all boils down to this one question, right? What does it all actually mean for you, the listener? Even if you aren't an economist or a day trader, these trends, they actually have an impact on your daily life.
Yeah, I think sometimes these big economic topics can feel really abstract, but they do trickle down to all of us in one way or another.
Exactly. Think about it like this. When interest rates are low, it could be a really good opportunity to, refinance your mortgage or maybe take out a loan to finally start that business you've always been dreaming of.
Okay, yeah.
But on the other hand, if inflation is climbing really fast, well, you might need to tighten up your budget a bit and think carefully about, those big purchases.
So stay informed about the economic landscape. It can actually help us make smarter decisions about our own personal finances.
Absolutely. It's like having a roadmap for your money,
A roadmap. I like that.
Yeah, you can see the potential obstacles, the opportunities ahead, and make more informed choices.
Okay, I'm starting to see how all of this connects. It's not just about some, abstract numbers on a screen. It's about our lives, our families, our future.
Precisely. And, speaking of the future, that future is going to be shaped by a lot of different factors, including automation. We touched on it a little bit earlier, but it's something that's really worth emphasizing. Automation is changing the way we work, and it's only going to pick up speed in the coming years.
So what does that mean for someone who's listening right now? How can they, prepare for a future where automation is becoming more and more prevalent?
Well, I think it's all about adaptability and, continuous learning. Think about those skills that are uniquely human, things like creativity, critical thinking, problem solving, emotional intelligence. Those are the skills that will always be in high demand, even as machines take over more of those routine, repetitive tasks.
So it's not about trying to compete with machines. It's about developing those skills that actually complement them.
Exactly. Embrace lifelong learning, stay curious, and be open to adapting to new ways of working. The future of work is constantly evolving, and those who can embrace change will be the ones who thrive.
That's a really powerful message. It's about taking ownership of our future and equipping ourselves with the knowledge and skills we need to navigate an ever-changing world.
And remember, knowledge is power. The more you understand about these forces that are shaking the economy, the better prepared you'll be to make smart decisions for yourself and your family.
Well, that just about wraps it up for today's Deep Dive. We've covered a lot of ground. Everything from stock market wobbles to the Fed's balancing act, China's economic policies, the rise of automation. It's been quite a journey. But I hope you've come away with a deeper understanding of the global economic landscape and how it all connects to your life. Because remember, economics isn't just about numbers, it's about people, the choices we make, and how interconnected our world really is. So stay curious, stay informed, and we'll catch you on our next Deep Dive.
We've talked about interest rates and inflation and these global stock markets, but it really all comes back to, what does it mean for you, right? For the individual listener. Because even if you aren't, an economist or someone who's trading on Wall Street every day, these trends, they do affect your life in some way.
Yeah, no, that's so true. It's easy to kind of get lost in the big picture, but these things do trickle down and affect all of us.
Exactly. Let's think about it in a practical way. When interest rates are low, it could be a really good time, maybe to refinance your mortgage or maybe take out a loan to finally start that business you've always been thinking about.
Makes sense.
But then, on the flip side, if inflation's high and those prices are climbing really fast, you might need to, kind of adjust your budget a little bit, think twice about, those big purchases you might be planning.
Right, right. So basically, staying informed about what's happening in the economy, it can actually help us make better decisions about our own personal finances.
Exactly. It's like having a roadmap, for your money.
A roadmap. I like that.
You can see those potential obstacles ahead, those opportunities, and make, smarter choices.
Yeah, I'm definitely starting to see how it all connects. It's not just about, those numbers on a screen somewhere. It's about, our lives, our families, our futures.
Precisely. And, speaking of the future is going to be shaped by so many things, including automation. We touched on it a bit earlier, but it's something, it's worth really emphasizing because it's changing the way we work. And that change is only going to accelerate, in the years to come.
So for someone who's listening right now, what does that mean? What can they do to, kind of prepare for this future where automation is playing a bigger and bigger role?
I think it all boils down to, being adaptable and, never stop learning. Think about the skills that are, really uniquely human. Things like creativity, critical thinking, problem solving, emotional intelligence. These are the skills that are going to be in high demand, even as, machines start to take over some of those more routine tasks.
So it's not about trying to compete with the machines. It's about figuring out how to work alongside them.
Exactly. Embrace that lifelong learning, stay curious, and just, be open to new ways of working because the future of work, it's always evolving, right? And the people who can roll with those changes, they're the ones who are going to thrive.
That's a great message. It's about taking control of your future, equipping yourself with the knowledge and the skills to navigate this, crazy, always changing world.
And remember, knowledge is power. The more you understand about these forces that are shaping the economy, the better equipped you'll be to make, good choices, not just for yourself, but for the people you care about, too.
That's a great point to end on. Well, that's all the time we have for today's deep dive. We covered a lot, from those stock market wobbles to the Federal Reserve's, balancing act, China's economic policies, even the rise of automation. It's been a wild ride. But hopefully, you've come away with a better understanding of what's happening in the global economy, how it all connects to your life. Because, at the end of the day, economics, it's not just about numbers and charts and graphs. It's about people. It's about the choices we make. And it's about how interconnected our world really is. So stay curious, stay informed, and we'll see you back here for our next deep dive.